So, Paul, what would a nervous investor need to be told about what's going on in the market right now, especially after yesterday's big decline in the S&P and the Dow and the NASDAQ?
Well, there's a lot of things you could tell a nervous investor, which inherently we're human, so most of us are nervous when the market is going down. Yesterday we saw a pretty good pullback, which is just a continuation of a pullback that we've been seeing for the last couple of weeks since the beginning of October. So the Dow and the S&P hit a high around October 3rd, which is just a little bit higher than it was back in January of 18 of this year. And with the couple weeks pullback, the Dow and the S&P have now erased all of their 2018 gains, and the NASDAQ is actually into correction territory, which is defined as a drop of more than 10%. I think what's important to remember here is that a normal, healthy market, on average, will experience at least one correction each year. Now, we may have forgot this because in 2017, the market went pretty much straight up and we got a little comfortable. So volatility is returning, and that's really just a healthy market. And as investors, we get rewarded for dealing with this short-term volatility. So
if I was a 60, 65-year-old investor and I saw what was going on in the markets right now, especially with everything going on in the world, what type of advice would we give that type of investor in this type of market?
You hit the nail on the head with what's going on in the world. I think a big part of the reason the markets are down right now is because of geopolitical concerns. The three big concerns I'm seeing are possible tariffs and a possible trade war. Looks like growth is slowing down in China. And then in the US, we have rising interest rates, which is starting to concern some people, but is also part of a normal market cycle. So you mentioned, well, what about an older investor? And I wouldn't even call that old, just someone that's past the halfway point, age 60, 65. It's normal for investors to become more sensitive to volatility as they get older. That's generally because they're approaching the day where they flip over from being a saver into a spender. And that's a very difficult thing to deal with psychologically for many people. I think it's important to remember that we're human beings. We're fundamentally emotional. We have instincts that tell us to run from danger. Money puts food on the table. So when the market goes down and you see money evaporate, your instincts tell you to run. But all of the research, all of the history, and most likely all of what will eventually be history going forward says that we need to stay the course. So if you have a diversified portfolio built by an advisor that has listened to you and your particular goals, and they've set you on a path toward that goal, you really need to stay on the path. So everybody knows it. Sometimes they get sick of hearing it. These are long-term goals. This is short-term volatility. Even if it turns into an actual market correction or bear market, which is defined as more than 20% drop, we need to continue doing what we're doing.